Hi guys, welcome to the final market update for the Q3 earnings season for the intrinsic values. So for this week's market update, we'll be focusing on companies in the Dow Industrials or the DJIA. So these companies will be Johnson & Johnson, Disney, United Health, Intel, Coke and 3M. Before we begin, here's a quick disclaimer for you. Alright, let's get into the video. Our first stock is Johnson & Johnson. Johnson & Johnson is one of the world's largest manufacturer and distributor of products in the healthcare field, specializing in pharmaceutical and medical devices. So this is Johnson & Johnson's intrinsic value update. So they're currently like a really mature company, so their growth rates are definitely lower. So I've put 8%, 6% and 3% respectively. And with a discount rate of 5.65%, we can see their final intrinsic share value that is generated is $179 or $178.89. And this is a 3.73% discount to their current share price at $172. So this is the chart of Johnson & Johnson. So we can also see here after their stage 2 rally, they've entered into a stage 2 distribution phase where the moving averages cut across the price action right here. And there's multiple resistance levels, once, twice, 3 times, false breakout, 4th, and it's back here 5th time, and support 1, 2, 3, 4, 5 times. So trading within the range is currently rebounded off the resistance level, and it's going downwards back into the range. And if we somehow reach this $158 support level, it might be a good time to enter as a long-term investment, because it's a pretty good value down there at the bottom of the range we can see. Or it might be good for a swing trade. You can constantly swing trade this multiple times. As you can see, there's a really repetitive pattern going on here within this range pattern, range market for Johnson & Johnson. Moving on, our next stock is Walt Disney. Walt Disney is one of the world's largest entertainment and media companies. They also own the hugely popular Marvel Entertainment franchise and have also recently launched Disney+. Moving to Walt Disney's intrinsic value, I've given them higher or more aggressive growth rates due to the release of Disney+, and they are supposed to do really well with Disney+, as well as now lockdowns are lifting and people are returning to their amusement parks, etc. So I give them about growth rates 25, 15 and 10 for the 3 categories, and the discount rate is 7%. But we can see here that their final intrinsic share value is only a measly $43.50, and currently trading at $155. That is a 250% premium on top of their intrinsic share value. So Disney is way overvalued. So I would not enter Disney as a long-term investment. I mean, if you love Disney, yeah, you can love Disney, but you don't need to buy the stock. So yeah, it's really I will stay away from this. So this Disney's chart, as we can see, due to their bad earnings miss, we can see here this E, they have collapsed recently and found support at around $147 right here. But as we know, this is intrinsic value, as we calculated earlier, is much lower. So this is not a stock that I will invest in the long term. And also we can see the moving averages are generally sloping downwards. So this is not a really healthy stock to invest in my opinion. So this is Disney. Our third stock is UnitedHealthGroup. UnitedHealthGroup is a large insurance company that provides healthcare products and insurance services to its clients. Looking at UnitedHealthGroup's intrinsic value update, we can see cash flow growth rates of 10, 8 and 4% respectively for the 3 categories, and a discount rate of 6.15%. It generates a final intrinsic share value of about $547, which is about a 10% discount to their current share price of about $489. So this is the UnitedHealthGroup chart. You can see here it's in a beautiful long-term uptrend, and it is a healthy uptrend because the price keeps retracing higher highs and higher lows. And so if we look at this, there's a long-term support or strong support level, I should say, at this 200 EMA, the yellow line, once, twice, 3 times, 4 times. And if the stock price comes back here for a 5th time, I'm definitely sure that most certain that the stock price will rebound off this level, because it has done so 4 times previously. And it also has confluence with 2 areas of resistance that might potentially become a level of support for the price action right here. So as we know, UNH is already undervalued, so a good entry point or to start a position in UNH for diversification purposes in your portfolio might be around this $430 price point when the stock price retraces further. So just gotta be patient. The fourth stock of our market update this week will be Intel. Once a giant, Intel has fallen behind some of its flashier peers like Nvidia. However, Intel is still the world's largest semiconductor company by revenue. If we look at Intel's intrinsic value, they have matured and they are growing at not such a high speed and high pace as their other semiconductor competitors. So I've given them lower growth rates of 10, 8 and 4% respectively. And with a really low discount rate of 4.65%, we can see their final intrinsic share value is about $109 to $110. And this is about a 51% discount to their current share price at about $53.87. So this is the Intel chart. So if you look at the Intel chart, since 2018, or the start of 2018, almost 4 years now, it's been in a long-term range market. So while we calculated earlier that Intel is way undervalued, I would not like to invest in a company that goes sideways for 4 years. So unless I see a huge reverse or change in trend to an uptrend and a breakout of this total range market, Intel is not a stock I would consider, because there are many better options out there in the market, or many other better semiconductor companies out there in the market for me if I would like exposure to this industry or this sector specifically. Our second to last stock will be Coca-Cola. Everyone knows Coca-Cola, and it is well known for being one of Warren Buffett's top holdings in Berkshire Hathaway, claiming the third spot. So this is Coke's intrinsic value update, and we can see cash flow growth rates of 12, 8 and 5% respectively, and a discount rate of about 5.9%, we've generated an intrinsic share value of $67. And this is about a 9% discount to the current share price of about $60.79. And Coke is a really stable company, so if you're looking for a good defensive stock to add to your portfolio, I think Coca-Cola would be a good choice or a good addition to your portfolio as well for diversification purposes. So this is the Coke chart. We can see that it is in a long-term uptrend, but it's not a really strong uptrend. It's a choppy uptrend, I would say. Like, it chops across the price action, it makes a short rally, chops across the price action, makes another short rally. So we can see here there's another short rally recently. And yes, while it's undervalued, we calculated earlier, I would not like to enter around this level because it's very overstretched from the moving average. So it's bound to snap back down and come back down to earth, where I would probably like to enter maybe somewhere around this $57 price point if I would like to start a position in Coke. But there's a previous areas of resistance and it might become a potential level of support or area of support for the price action. So this is probably where I'll look to enter Coke. Our final stock for this update is 3M. 3M is a manufacturer and distributor for a wide range of abrasives, adhesives, and consumer electronic components. Looking at 3M's intrinsic value update, we can see cash flow growth rates of 9, 5, and 3% respectively, and I've given them discount rates of 6%, and their intrinsic share value generated is $209.50 around there. So this is a 14% discount to their current share price of about $179.50. So yeah, 3M is a pretty good company to undervalued and stable, as well as a mature company. So if you're looking for additional diversification purposes, I think 3M is a pretty good shout as well. So this is the 3M chart. You can see that after a stage 2 uptrend, a stage 3 distribution phase, it has now collapsed back down stage 4 downtrend, and it's now in somewhat of a stage 1, I would say, stage 1 phase. So the previous area of resistance right here found support at about $175, is now an area of support for the price action. And 3M is currently in a downtrend. As we can see, the moving averages are all sloping downwards, and there might be a possibility of a descending triangle, as is also mentioned this earlier, that it's lower highs into the same area of support, so there's increasing selling pressure over time, so eventually it will break through that support level. So 3M might be one to look at because it's undervalued, but we would like to see a reversal in trend before we consider starting a position in 3M. And that's all the stocks we have for this Q3 earnings season update. Here's the usual summary table that you guys can refer to of all the stocks and companies mentioned in this video. If you guys like this series, give it a thumbs up. Please like, share and subscribe, and we'll be back with this series when the Q4 numbers come out. And as always, may the markets be in your favor, and I'll catch you in the next one.